Alright guys, welcome to another video. Today I'm going to show you the strategy that actually made me all of this, made me be able to live in an apartment, leave my 9 to 5 and everything. Also right here you can see me in the trenches, so this is not some like fake guru like, oh, I was working 9 to 5, I was flipping the burgers. I was actually putting in the work every single day in the trenches. So let me just show you what I do for the living and how it's working out. So as you can see, these are my results. Like this is this month. This is real results. Of course, straight away Tradezella. I can even refresh it. So you can see that this month I only had one win so far, but I'm pretty confident that this month is going to be huge. So that's out of the question. Also, you can see right here my other channel where I basically just post all of the trades I take, all the live sessions, everything. So if you want to check it out, it's going to be down there. It's just Nico trades recaps, and also right here Tradezella. So what I'm going to teach you today is just a simple model that actually works in the market. Oh my god, my indicator is actually turned on. I'm going to turn it off. So basically, what are we going to do on the chart? So on the chart, all we are going to do is look for highs, lows, and basically deliveries. So what I mean by that, I mean that we are going to spot these highs and lows, as you can see right here. Why? Because when we spot them out like this, if I draw lines on them, so if you spot out this liquidity or high in the market, you can see that after market actually comes up, sweeps it, then it reverses. So it's very simple logic behind it, and that's why they're so important, because we are always going to look for some kind of reversals off of them. So you can see this slowdown here, we reversed. Also we have delivery right here, so it's just all going to be very simple. So all we are going to look for is liquidities and fair value gaps. And basically liquidities, as I just told you, highs and lows in the market. Why are they important? Why do they have any kind of logic behind them? Because when the market basically starts going to the downside, what do people do who enter, let's say, sell positions? They put their stop losses right below, above this high up here. So they enter trade right here, stop loss right here, and target maybe some kind of low down here. And what happens later? Market comes up, sweeps those stop losses, because market actually functions in the way that market stops everybody out, banks stop everybody out, and then they make the true move, or basically a true direction. Like you can see right here, we swept this liquidity and then we reversed after it. So market is always going to look for some kind of manipulations, for some kind of highs and lows in the market, which basically is just going to get them fuel to the fire so they can actually make the true move. Because you can see right here, market tried to go to the downside, but then this little liquidity reversed it to the upside, so it came all the way up here, and then after it swept once again this basically liquidity, this high, where of course a lot of people enter the market like this, basically just gonna reverse again to the downside. So that's just what we are going to look for in the market. So when we know how to spot highs and lows, which if we scale out the market, in the market we have only this high up here, and then we have this low down here. This one was just swept, market tried to reverse but didn't manage to in the end. So what we are going to look for is always just spotting out these highs and lows in the market. The next thing we are going to do is basically spotting the fair value gaps. So what is a fair value gap in the market? This right here, for example, is the fair value gap. So we just look for these holes in the market, which is basically we need 3 candles, and then from the first to the third candles wick, there's going to be space in between like this one. So we just want to see that in the market, and we are going to mark it out. But where do we specifically want to see these? We want to see them around these liquidities. So if we scale out to the back like this, we are on the hourly time frame right now. If we scale out to the back, we can see that we have this liquidity right, not liquidity, but fair value gap right here, that is just above this fair value gap. So if the market was actually to right now come to the upside like this and sweep this liquidity, tap into the fair value gap, that would be the perfect opportunity for us to actually reverse the market to the downside. Why? Because we stopped all the people out right here, and we just came into this imbalance that market is always going to want to fill. So market is always going to take out liquidities, and market is always going to try to fill imbalances. So it's very simple. And then after that, if this doesn't happen in the market, we are going to look for another direction, which is this one to the downside. So this right here, this is a fair value gap too. It's not really a fair value gap, but it's similar thing. It's like new week opening gap, but it's the same thing. So what we are going to do is just mark it out, because you guys can just imagine that this is the most normal fair value gap. So what we are also going to do is, if the market actually goes to the downside like this, we are going to want to look for reversals after this sweep. It's pretty logical. So if the market goes to the upside, basically to this high up here, we are going to get trades towards the downside. And if the market goes to the downside like this, we are going to get trades towards the upside. So now the second part is completely on you. So now we did this on hourly time frame. So now you can choose. When we come to one of these liquidities, right here, you can either choose to enter off of the 1 hour fair value gap, 1 hour entry, or the lower time frame entry, which can be on the 1 minute, 2 minute, 3 minute, 5 minutes, like whatever time frame you want, this entry can be made on. So I can first of all show you the hourly time frame, which is basically going to be when we basically sweep this low down here, we are going to look for a specific pattern. So let's see what is going to happen in the market. My replay is bugging out a bit, but alright. So we swept this liquidity. As you can see, we made a perfect sweep right here, tapped into this fair value gap because we were already inside it. So if we went to the upside, we do not only want to see the sweep, but we want to see the actual tap into this fair value gap so we can reverse. So what we are going to do now is we are going to look for this. So if we zoom out all the way in, I'm going to remove this because we know we have swept and tapped into the fair value gap. We want to look for the last fair value gap that was made in the market. So look at this. This is right here the fair value gap, and this right here is fair value gap 2. Now this is going to be the key part that you guys have to really like. You have to make sure that this doesn't happen. When these two fair value gaps are like this close together, if we actually inverse one of them like this, that's it, we are entering the market. But if we inverse this like this and tap into the next fair value gap like this, we want to see both of them getting inversed, because fair value gaps are always going to either reject the market like this, or they are just going to fail the market and let the market run to that side. So if we want to get a trade to the upside, because we have all the confluences, liquidity, fair value gap, delivery is just fair value gap, different name. If we have this confluence right here and we tap into this fair value gap, this fair value gap still wasn't disrespected and can still basically reverse the market towards the downside and make us lose the trade. So we are always going to be really careful about it and not enter the trade if all of the fair value gaps that were tapped into were not disrespected. So let's see what actually happened right here. Okay, so market actually perfectly inverse this fair value gap, and if we enter the long position right here like this, and we can basically put our stop loss right here. And now this is completely also on you. I personally like to target 1-to-1 because market is always just going to hit these within, I don't know, so quickly, and we are just going to be out of the trade. But if you want, you can target some logical liquidity like this high right here, or like this high all the way up here. So it's completely up to you. And also I'm pretty sure my indicator called this. Let's see if it did. Let it load up, because my indicator, I made it. It's been so tough at making because programming is hard as hell, and I'm never probably gonna sell it. But look at this. We swept liquidity, indicator sees that. We tapped into this fair value gap, indicator sees that, and indicator spotted exact disrespect of the first fair value gap, and that's why it basically gave A+ right here. So I'm gonna turn it off. And the logic behind it, we disrespected this one, so we just have to go to the upside. It's pretty normal. So right now, if you were to target 1-to-1, you would be out of the trade, of course, right here. But if you were to target something huge like this, which a lot of people actually do like a lot, let's see what the market actually did. So it's going pretty nicely to the upside, and it just hit my TP. Oh my god, TP went to the sky. So it just came so close to the TP right there. And is it gonna hit? Let's see. And the market had hit my TP. So right now I'm gonna actually show you how you can take the same trade but on the lower time frame, because a lot of people just want to do it on the lower time frame. They want to kind of catch bigger moves to the upside. So this was around 6 risk to reward, because we always put our stop loss like this. yeah, 6.66. So let's see how you can take this trade on the lower time frame. So if I move the market back, remove these two fair value gaps, and go to, I don't know, we can go to 5 minute, 3 minute, or 1 minute, so, or 2 minutes. And if you basically want to see the entry on one time frame, I'm gonna say this right now. On the 1 minute, there's gonna be a lot of noise. You can still do it, but it's gonna be a lot of noise. So you can do it either on the 5 minute or in the 3 minute if you want to scale down strictly from the 1 hour. But if you want to basically, what I seen on the 1 hour, all these fair value gaps and liquidities, if you want to spot them on the 15-minute time frame, so if I were to discover my bias on the 15-minute time frame like this, then it's very nice to go to the 1 minute. But like this, I don't want to go from 1 hour to 1 minute because it's whole different chart. Oh my god, JC just gave a setup on the indicator. Okay, so basically what I'm gonna look for is, of course, a sweep of this, which is going to just make us know that we have already tapped into the fair value gap. And let's see if that actually happens. So we just swept it, and now when we swap this liquidity down here, we want to see a disrespect of the last fair value gap. So the same thing I did on the hourly, because this is the logic of the market. This is, you can do this on any time frame you want and it will work out. So you can see after we actually swept this liquidity, we wicked inside it, and then we wicked once again, but we didn't actually close it. So we are still waiting for that entry. And it looks like the market actually didn't give us entry here. So what market did, swept this leg once again. So are we going to now get an entry? Let's see. Okay, my internet is bugging out. So right now we actually had an entry right here. So let's see if this is going to be a good entry. If we enter the market right here, put our stop loss, we can put it below here, or we can give it some space. It's really not like, it's all up to you, I would say. So let's see if this is gonna play out to our favor. Of course we can target whatever we want, but let's see how is this gonna play out. So it played out to 1-to-1 instantly. You can, oh my god, sorry, you can see it like within I think within 3 minutes, or what is it, 6 minutes, it just skyrocketed to 1-to-1. And then after that, if you were to target this high, oh my god, this would be insane take, bro. Oh my god, wait, I can't even move my, oh my god. Yeah, this is just 1 in a million trade. Like, look at this. If you were to target this high for, I don't know, 100 risk reward, would it work out? Because this is the higher time frame picture to the lower time frame picture, and of course it would, because we went all the way from the 1 hour time frame down to the 3 minute time frame to enter. So what you can do is always just target some kind of logical level on the lower time frame, because who is going to hold the trades for, I don't know, 20 risk reward? You would just die on the spot. So if you were to do that, it will of course hit because we are aligning with the whole target. But I just like to do it 1-to-1 or sometimes 1-to-2. But you can see that market is just going to respect the whole move like this that we actually wanted to target, and it's just going to go to the upside. So that's it. Like, this is the whole strategy that I want to show you. And like, it's very simple, it's very mechanical, so you guys can just spot it on the chart. And also, before you guys leave the video, here is something for completely free. So if you actually want to like learn this strategy in depth, I'm gonna give you my playlist of the whole strategy. So it's gonna be 10-page playbook that is just going to be make you able to have a checklist of everything, and basically steps and all the confluences you need to see. And you can keep it by your side, and you can just trade with it, of course, profitably and make money. So all you need to do is go down there in the description. All you can do is just claim it for completely free, and that's it. And basically, I hope you guys found some value in this video, because as you can see, I'm sick as hell and I managed to record it. So I hope you guys learned something new. And if you guys like the video, just throw that like and subscribe to the channel if you want to see more of videos like this. And basically that's it. I'm gonna see you in the next one. Peace.